one thing's become very clear over the past couple of weeks. We have got a stampeding bull market in the great outdoors. The RV stocks are roaring. Thor Industries knocked it out of the park when they reported last week. May have seen them on the show. The golf stocks we've liked for ages, think Callaway, Acushnet, they are white hot. The boating stocks are roaring, with Brunswick up 138% from its March lows, and the smaller Malibu boats closing in on a new all-time high. I just go sell my 17-foot Boston Whaler. But then how would I fish? Remember, one I used last time, Yeti. It's one we've liked from the beginning, but I was actually using the real deal. The cooler and outdoor drink wear play. It's up 5% for the year. Just set a new all-time high on Monday. Even Dick's Sporting Goods, an old-fashioned retailer, was able to rally on. I reported what I thought was a not-so-hot quarter last week. Oh, and try getting a bike in this country. I tried to look for one this weekend. There's none available, stationary or the road kind. Tonight, I've got another one for you. A great outdoors play that's still cheap enough to be worth buying at these levels, and I'm talking about Polaris. That's right, Polaris, which makes snowmobiles, all-terrain vehicles, ATVs, motorcycles, some boats, some military vehicles, those crazy and hugely fun slingshot three-wheeled roadsters, and all sorts of replacement parts and accessories, just like the RV stocks I highlighted last week. Polaris was a formerly hot stock that peaked a few years ago. It spent most of 2018 and 2019 as a serial underperformer thanks to the trade war with China. Then just when things were getting back on track after the Phase 1 trade deal with the Chinese, the pandemic hit and the whole market crashed. Polaris' stock plunged from the mid-90s to $37 in a matter of weeks. Makes sense. Who wants to buy a snowmobile or an ATV when you're stuck in quarantine? But like so many other COVID losers, Polaris bottomed in early April, and its stock has made an incredible comeback, surging to 96 as of today. It's now erased all of its coronavirus-related losses, and of course it has, because business is very, very good for people who have a product that allows you to have fun outside where it's safe. In retrospect, I wish I'd recommended it a month or two ago. Someone on Twitter was saying to me, hey, Jim, you've just been making big mistakes. I said, well, look, I make mistakes. I should have recommended this earlier. It was an incredible move, and if you caught it, all I can say is congratulations. You did a better job than I did, and you got horse sense. Personally, I didn't want to get behind a snowmobile company going into the summer without more proof that the business was turning because of the recession. You don't typically buy these in a recession. Now, though, we've got that proof. Plus, the stock has spent the last couple of days pulling back from its recent highs, so I think you're getting a pretty good darn entry point right here, and I'm going to tell you why. First, what makes Polaris different from, say, the airlines or the cruise lines that I've been warning you away from? As I see it, those groups got way too hot. They ran up substantially from their lows, even though business is still terrible. A big chunk of that bounce was justified, but by last week, they'd gone about as far as they could go, and they were due for a serious pullback like the one we are having. That's not the Polaris story. Not at all. Polaris has a genuine turn. It started when the company reported at the end of April. While the actual numbers were unambiguously bad, not a lot of demand for snowmobiles or ATVs when everyone's sheltering in place, management's commentary was a lot more encouraging. They told us the worst was already behind them, and they gave us a tremendous amount of detail on North American power sports business. Basically, the second half of March, their power sports retail sales in North America declined by 40%, but then April was much better than expected. 3 weeks into the month, those sales were up, not down. Then over the course of May, we got all sorts of good news. I think Polaris would have rallied hard anyway because it's exactly the kind of beaten down cyclical stock that suddenly went back into style on Wall Street's fashion show until today. But this rally had more meat to it than many of the others. Specifically, about 2 weeks ago, Polaris made 3 incredibly positive announcements on the same day. First, CEO Scott Wine gave us some insight into how the business was doing. He talks about, quote, the unexpectedly sharp recovery we are seeing, which in many cases has meant unprecedented demand for our brands and vehicles, end quote. Unprecedented demand? I mean, he goes on, quote, the influx of new customers to our dealerships is very encouraging as people seeking fun family activities while social distancing recognize that our vehicles and think outside tagline resonate with their desires. Makes sense. Second, Polaris confirmed that they'll be maintaining their standard dividend, which currently yields 2.6%. When the company reported at the end of April, they said that they would delay the decision on whether or not to suspend the dividend until late May. They didn't want to cut the legs out from under their investors unless they had no other choice. Turns out the payout is safe. Third, Polaris doesn't have the cleanest balance sheet, but they negotiated with their creditors to get some relief from the most restrictive aspect of their covenants. Basically, they'll be allowed to borrow a lot more money if they need to through March of next year. Put it all together, and you got an incredibly bullish business update. A confirmation that the dividend is staying put and a lot more financial flexibility. The very next day, CEO Scott Wine comes on our network and gives a fabulous interview to my friend Brian Sullivan on Worldwide Exchange, which is frankly where I got the idea to do this piece. Thank you, Brian. Wine made it very clear that even though the economy is still in rough shape, Polaris is thriving here because they're taking market share in a world where people are afraid to fly or take cruises or gather in large groups. Camping, riding around in an ATV or a snowmobile while wearing a helmet, this is all stuff you can do for fun while minimizing your potential COVID exposure. It's the right sports for the moment. Still, it's not exactly an undiscovered story. Polaris' stock has soared from its lows. The analysts are starting to upgrade it aggressively based on the great outdoors thesis. So then why do I feel so comfortable chasing it here? And you know I hate to chase. Well, because Polaris is taking share. They're bringing in lots of new customers, and I think this is a once-in-a-generation opportunity for this company. Just as importantly, the stock has a reasonable valuation, sells for 17 times next year's earnings estimates. Hey, compare that to the RV plays like Winnebago and Thor, which sell for 20 and 22 times earnings, respectively, and are more expensive in, again, a recession. All right, so Polaris isn't quite a bargain, but it definitely isn't too hot to handle, especially with that 2.6% yield cushion. Don't get me wrong, Polaris is a somewhat high-risk story. They make some of the world's most expensive toys, and if the economy starts backsliding, well, that could hurt them. We know the trade war with China did some real damage, and trade tensions are flaring up again. If things escalate, Polaris, well, it takes a hit. But the bottom line, if you believe, as I do, that America is reopening rapidly, but we're not exactly going back to normal, too much social distancing, then Polaris is indeed the kind of stock you should own. This is a company that benefits enormously from the V-shaped recovery thesis, and it also works with a slower recovery because the great outdoors is taking market share from every other form of recreation that involves crowded indoor spaces. Let's go to Diego in Florida. Diego.
Jim, I wanted to ask about Vegas as people start heading back and MGM starts opening up more hotels. So should I hold my position with MGM despite the risk of second wave of coronavirus cases?
I think, the one I'm more comfortable with is Wynn, because I think Wynn has examined the healthcare issue very heavily. MGM Resorts has had a very big move, and I question whether this is the right time to continue to stay in it. Let's go to Nick in Indiana. Nick.
Yes, regarding AMC movie theater, I know they filed for bankruptcy. In your opinion, is it worth the risk to invest?
It's a very risky situation, and it's the kind of situation that unless I look the CEO in the eye and ask the right questions, I feel like I'll be letting you, Nick, down in Indiana. So that's where I am on that one. Let's go to Joe in Florida. Joe.
Jim Cramer, the Prince of Profit.
Oh, man, I wish I were.
Stock.
Thank you. What's
the
up?
MJ of the market.
Woo.
My question is Ford. With the world reopening back up again from the coronavirus and Ford's recent partnership with VW, do you see Ford becoming a major player in the electric car market?
I sure did like what Jim Farley had to say this morning. He's the COO, and I always enjoy him. He's such a smart guy. When he was on Squawk on the Street with us, and, of course, the unbelievably good Phil LeBeau, I think the stock is very inexpensive, but the catalyst will not be electric vehicles. It will be the F-150, and it'll be Chinese sales. And until then, I think you're okay. And I have not felt that way about the stock. I felt very good after speaking to Farley. All right, look, there is a fierce bull market in the great outdoors. I tried to show you that with Thor. Now I am bringing you Polaris. That's the kind of stock you should own in your portfolio, much more Mad Money ahead. Dreaming of a summer holiday? I'm sitting down with the CEO of Marriott Vacations Worldwide, find out how that travel industry is adjusting to the new normal. And believe it or not, it is better than 2007, 2009. Then, with COVID-19 hospitalizations rising sharply in several states since Memorial Day, the pandemic is still holding steady. Tonight, I'm eyeing an under-the-radar company that's hoping to help treat the virus, and we're talking about convalescent blood, a term you might have heard about. And all your calls rapid fire in tonight's edition of the Lightning Round, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.